Good evening, all. Ira Epstein of Linn and Associates with your SPDR ETF wrap-up. And this wrap-up is for Thursday, and we're now at July 1st, 2021. Can you believe it? We're already in July. So as I'm looking at the markets, you know what tomorrow's going to be. You know, trying to make any sense right now out of everything that's led up all week to the jobs data report is nonsense. That's going to be what everybody looks at. There'll be this first reaction, second reaction. It's going to be whatever it turns out to be. Don't try to anticipate the initial reaction. The algorithms will take over and they will spend the first few minutes really moving the market. After that, things should die down. But the question is, where's it going to lead you? There are some economic reports coming out besides that, but nothing will matter up to that. Then, of course, you're going to get traders leaving. Tomorrow at O'Hare is going to be the busiest, and that's Chicago, be the busiest airport, they say, in the country. I know my wife went out of town today, and it was a zoo, she said, first thing in the morning, and I mean early in the morning. And so, whatever. I'm here for you, though. All right, so as we look at the market, you can see AMC down a little bit. I told you I didn't like F9. I'm laughing, of course. 1.62 down in ARK pot stocks. Boy, that's not a pretty one either. So let's go and take a look at ARK. You know what I think the market's going to try to do is fill some of these gaps right now. You got one there and you got a small one left here. Wouldn't surprise me. It appears that there's another rotation play coming out of the techs temporarily and letting other things catch up. I keep hearing on TV people that want to talk about infrastructure, healthcare, those type of elements. A lot of talk about that, where to move into. When I look at the swing line, we still have higher highs, higher lows. The market is doing what I said, and this is bullish action, not bearish. You're getting the 18-day average. It's getting ready to cross over the 100. So you will have the 200, then the 100 in green, then the red. That's a very bullish setup in the market. That's a lot of support if the market falls back. I have my doubts, barring another COVID situation, that we're going to get back down here anytime soon, just looking at the moving averages. Where can the market fail? Well, it's beginning to do it. It's been the gorilla glue trade, and it's not unusual that right in front of a key report, markets start bending away, and that's exactly what it did. It's the first day in I don't know how long that it has not hit that upper Bollinger Band. So this is the market getting itself ready for whatever the reaction to the report's going to be. You still have the embedded reading, which means on deep breaks until that red line closes under 80, I think the trade's a willing buyer, but I'm going to repeat what I said. I think you want to let the dust settle tomorrow when that number comes out. European stocks have been doing terrible. Look at how they've been selling off. That's not a pretty move, especially compared to what the U.S. is doing. Oversold, yes, but downtrend. I don't know if it's going to have the strength or not to get to the lower Bollinger Band, and a lot's going to be determined by the U.S. jobs data and how the markets try to play with that. As for PAVE, you had your reaction. You're back to the 18-day average of closes. That's how I look at it. Now, do I think anything is going to be done in the summertime on infrastructure? I must tell you, I'm having great doubts. July gets to be a lost month as Congress goes away. They're leaving now. Then they do their usual talking. September, I have a lot of faith that something could be done, but I've got my questions about between now and then. AMC, you're back in a full downtrend. Lower highs, lower lows settled under the 18-day average should, keyword, should the market decide to drop down here, a potential support zone's 46.89. To negate the downtrend, you've got to get back up over the 5100 level. And remember, you're entering what I call this tight range in there, and that gets to be very difficult to trade in when the market's just hovering back and forth in these things. As we look at XSD, now these are the semiconductors. This was a vertical price rise. They're very difficult to catch. And why is that? Because each day you're making a higher high. You're not even getting a pullback in the market. And if traders are going to try to buy it, they want to buy on the pullback. Now, today was the first opportunity, but do you want to get involved in front of the jobs data? I'll leave that up to you. Until the red line closes under 79, the bulls are in control. PODX, the market's still very much in a downtrend, but very oversold. I do not think it's attracting new selling money coming into it. ESGU, so this market's trading and pushing out its upper band. Again, one of these markets that each day it only makes a higher high. You're not getting the break. Look at that often. Get used to that pattern. That's one of those vertical rise patterns. It's with an embedded reading. You're looking to buy a deep break off of that, whatever deep might mean. And for those of you that get the morning subscriber video, you know I have a moving average that we use for that. But I'm telling you ahead of time, I think you wait on everything for the dust to settle in the morning if you're not already in positions that you want to take through that report. In the energy sector, this is where the resistance should be right now. And I know energy prices are running rampant. We're at $75 plus in many of the WTI, the Brent. And OPEC did not reach a deal today as the UAE is holding that up as they want other concessions made to them. So we'll see overnight as everybody threatens everybody, whatever they do behind a closed door, if they can reach a deal by tomorrow. This is all being done virtually too. As you look at the EFA, lower highs, lower lows, let's assume it breaks, just for the sake of discussion. Pretty strong support from 78.12 to 14, oversold condition. In GLD, the market rallied today, but it still looks to me like it's in a bear trend. Lower highs, lower lows. You're in through here. You'd have to get the red line of the slow stochastic, which has a reading of 1541, to close over 21 tomorrow in the last 3 minutes of the day for me to say, okay, you got to be out of any short positions. Gold miners, the same thing. You got to get that number to close up and over 21 as well. TLT. I think that this is where the most exposure is. Why? Because this, BND and all the others, AGG, you got to be careful. These are the interest rate plays, and that's what's going to be really rocking and rolling off of this government jobs data report. So I'm not going to even talk about it. Last, as we get to the euro currency, dollar's just reigning supreme. You can see that. This market peaked out here in May, and if you just look at it, it's just been falling ever since then. So the dollar reigns supreme. Get on an airplane and go to Europe and enjoy the strong dollar. Well, if you could enjoy Europe right now because of the COVID, it'd be a great place to go. No question about it. Prices are right. But remember, you got Greece, and they're claiming that they're pretty COVID-free. Italy, you got a lot of cool things going on there. I want to remind you that in the mornings at approximately 8:40 in the morning, I record a SPDR ETF video for my subscribers. I cover in it 40 charts. I will put this out each weekday for you as it comes out. And on the weekend, typically on a Saturday, I record using only the weekly charts. Well, I shouldn't say only because I'll mix day charts in there. You can access it through the mobile app that we give you, your PC, your tablets, whatever it is. I start off with the news of the day. This is some of what I cover. There's much more than that. There is a cost to it, $8.95 for the first 30 days, no contract. You don't have to stay with it. You're going to get 24 videos in that 30-day period. That's a lot, and each one's 15 to 20 minutes long, but they've got a pull bar at the bottom. So if you want to see SPDR ETFs by itself, where I'm mixing things like this, but a lot more, it's there. Energies, currencies. I break everything down into the sectors. Just go to our website. Look under the word research. It's all explained, and there's a video there you can look at as well, and it explains everything too. I'm Ira Epstein. Have a great day.